Sixth edition of our what we're calling our Buyers Bootcamp. But today we're going to be looking at loans, what types of loans are the best for different clients, and also a little bit about rate buy downs because I think there's a lot of misconceptions about rate buy downs. So just wanted to introduce you, Rich Cordova. And Rich, what's your phone number?
Yeah, thanks, Dave. I'm excited to be able to talk a little bit about this here with you today. Again, I'm Rich Cordova with True Rate Home Loans. I'm local here in St. George. I'm a local independent mortgage broker. You can reach me directly at 435-669-8003. And yeah, Dave, I'm kind of excited to be able to just talk a little bit as far as, some of the myths and things that hold people back from obtaining home ownership. And then just a little bit as far as what you'd mentioned, as far as rate buy downs, I think that's an excellent opportunity to be able to save some people some money. So we can dive into that a little bit.
Let's talk about loans for a minute. Choosing the right loan. So obviously, there's different types of loans and different types of qualifications. And I think a lot of times buyers come into the market, and there's two different areas that I wanted to focus on. One is the luxury buyer who finances something on a million and a half dollar home, and they usually only finance a portion of it. And then the other one is first time ish buyers who are first coming into the market. So tell me about the two different, trends of thought that you have on those two different loans.
Yeah, absolutely. I mean, you bring up a good point, and that is that, there's a lot of different loan programs out there. And, when someone asks, like, what is the best loan program, it really depends on somebody's individual scenario. So, you mentioned two unique different scenarios that are going to require a little bit different of a financial approach. Usually, like kind of on the luxury high end, those can be self-employed borrowers. Those can be people with more complicated financial situations, complex tax returns. So, when you're working with one of those clients, it's typically having the understanding of being able to deal with their complexities of their financial situation to be able to structure and put together the best mortgage deal for them. Now, I'd say kind of on the opposite side there for first-time home buyers, a lot of times their challenges revolve more around things like credit challenges. That's one thing people assume, well, maybe I can't get approved because I have this credit issue. Well, realistically, there's a lot of programs out there. There's a lot of different things that we can do to get you qualified. So, if you've got a credit challenge, don't just assume that you can't get qualified. You want to find out exactly what's keeping you from getting qualified and then put together a plan from there. I'd say another big one is always down payment. Kind of the common misconception, back in the day was you needed 20% down. I think we've at least squashed that where most people don't assume you need 20% down, but even 3 to 5%. Let's face it, on a $700,000 house, 5% is $35,000. That can be a pretty big chunk of money for someone to come up with. And fortunately, there are a lot of programs out there with lower or no down payment programs. So really talk with somebody, find out what those options are because you just might be surprised.
Yeah, absolutely. Okay, so on the first-time home buyer, there are programs out there to assist with down payments. I know that the Realtors Board has a down payment assistance program, and of course, they only have limited number of these available, and they run out two or three times a year. They'll reintroduce it, but it comes from different fees that we collect. And I know there's other first-time home buyer programs out there. Tell us a little bit about those.
Yeah, absolutely. I would say being in the mortgage industry, that's one of the things that I've seen kind of open up a lot over the last few years. There really wasn't as many down payment assistance programs even, 3 to 5 years ago. Some of the ones that were available, like you mentioned, they would commonly run out so that, there wouldn't be another availability until the following year. Now, I would say there's a lot more availability. Typically, we don't run into an issue where, oh gosh, there's no funds available. We don't have a program. So there's a lot of different options. Some of that can be dependent on where you live. Each states have different down payment assistance programs. Utah's a really strong state for it. And, I know they're even coming up with other programs. That's a big thing on the agenda. So that's just one of those things where, like I'd say, explore the option. You'll be surprised. You'll probably find that there is a loan program available that doesn't require a down payment. But it's also something that's constantly changing. I know that it doesn't feel like anybody, really is looking out for first-time home buyers, but there are some things happening in the background where things like that are opening up. So, it could be not available today, and in 6 months, there's another program. So, don't just assume that it's not available.
Yeah, and some of the programs operate differently. Like some of them participate in equity in a sense, because on the payback, if you were to sell the property 3 or 5 years down the road, you pay back the loan plus the interest rate that it would have been on that portion of the property. Do you know much about how those paybacks work?
Honestly, personally, we don't do anything that attaches to the equity of the property.
Okay.
I do know there are programs out there that are available for that sort of thing. But again, I would just talk with the loan officer, see what's available, and I would compare those options. If there is something where it's attached to the equity, that may be a good option, but I would definitely suggest you look at other financing options so that you can compare the two and make the decision from there.
Yeah, do a side by side sort of comparison with them. That makes total sense. Okay, want to talk to you about interest rates. Now, interest rates right now are hovering somewhere around 6%, give or take, right?
Yeah, absolutely. And obviously, I mean, FHA is going to be lower, VA is a little bit lower, but yeah, for a conventional, we're right around 6%, which even though that is still high, I mean, we were, gosh, creeping up to almost 8% almost 2 years ago. So
Yeah.
I know that rates aren't yet where we want them to be, but it has definitely encouraged people to get out there and start shopping again. So, we're not thrilled where rates are at, but we're definitely happy and we like the direction that that they've been heading. So
It's funny talking to an old timer like myself. I'm 66 years old, and I remember my dad telling me, I will never refinance our home because I have a 5.5% mortgage rate on it, and I'll never find that again. And this
yeah.
was like, 50 years ago or so, 40 years ago. But looking back over the past 50 years, the average interest rate is 8%, which is really hard for us to digest right now because we've had these, number one during COVID, really artificially low rates and such. But I feel like we're going to land somewhere in the mid fives, and that's going to kind of be the stabilizing factor. I could be wrong. I hope I'm wrong. I hope it goes lower, but I don't think it's going to. I think that's a realistic thing. What are your thoughts?
Yeah, I mean, it's really hard to project where the absolute bottom would be because there's just too many, there's too many unknowns that can happen that, could drive rates back up a little bit or back down even a little bit further. I do think that your estimation is probably fairly accurate. And that's why I would say we're seeing more market activity is, if we're thinking that the bottom is somewhere in the fives and right now you can get a 6% rate, well, obviously, we always would like to get the best rate possible, but realize, we're fighting competing forces. Waiting for the best rate is just going to bring more people into the market. So you do have a little bit of a Goldilocks zone, in my opinion, right now, which is, rates are a little bit higher than what we would like, but at the same time, that has created a little bit of an opportunity where we don't exactly have quite as many buyers as maybe would be around if we were at, low fives, high fours, something like that.
Yeah, exactly. I mean, you and I remember just a few years ago when there was 15 offers on each house that was up, and it was really a crapshoot trying to get, especially a financed buyer. It was almost impossible. Let me put it that way.
No,
When things
absolutely. I
got
unfortunately,
crazy.
especially, like a FHA 3%, the 3.5% down. Unfortunately, yeah, if there were multiple offers, it was hard not to take, someone putting, 30% down, paying cash, ready to close in 2 weeks. So yeah, definitely.
Yeah. Okay, let's talk about rate buy downs. A lot of times, if I'm representing a buyer, and we're on any kind of bank loan, we oftentimes will ask for a buy down rate, and sometimes at the expense of paying a little bit higher on the home. So if you were to take an average $500,000 home, we might come in at full price or even at 515 and ask for a $25,000 buy down to buy the rate down. I don't know what that would buy it down to. I'm guessing it would buy it down to somewhere around 5 or 4 something at 25,000. We actually just did a blog on this, so if you guys want to go on to my website at utah.dreamhomes.com and go to our blog, you can actually kind of see a graph of where that pans out. But the bottom line is buying down doesn't pan out unless you're going to be in the home for a little while, does it?
Yeah, well, with buy downs, first thing to understand is there's two different types of buy downs. We have a temporary and a permanent or long-term buy down. So over the last couple years, we've seen, and these didn't really, you didn't see these too often except for the last few years. We've started to see temporary buy downs. Now, with those, essentially what you're doing is you're buying the interest rate down up front. And a lot of times, maybe even a seller will contribute to that. And, obviously, I always defer that part to the agent because each house is going to be different, right?
Yeah,
If this house is worth 400 and they've got an offer in at 350, they're probably not going to be willing to give concessions. Where
right.
on the other side of that, they may be willing. So I always defer that to the agent. But on the temporary, usually you're buying it down for the first 1 to 3 years. And then after that period, it'll reset back to the long-term interest rate. That can be a good strategy if you know you're not going to be in the house for very long. You're just trying to kind of get that rate down because in a couple years you plan on selling and you're going to be moving somewhere else. The long-term rate down buy down is a great option because it's going to save you over the life of the loan. Now, obviously, that's going to save you the most amount of money if you end up keeping the loan for the entire 20, 30 years, whatever the term is. So that's kind of the big caveat to be aware of is, you may even think, well, gosh, this is my forever home. But realistically, if rates improve to the point where you refinance, you may not have the loan long enough to recoup the amount that you spent buying it down up front. So realize anytime you're getting a mortgage, it's always a balancing act between rate and cost. Anytime you have a lower rate, you're going to have a higher upfront cost. Anytime you have lower upfront costs, you're going to have a slightly higher interest rate. Which one is better? Always just depends on your individual situation. So, that's usually something that we're going to sit and have a conversation about. I'll give you a couple different rate options. I'll show you the rate with the lowest cost. I'll show you one in the middle, and then I'll show you the lowest rate with the highest cost and kind of talk with you about, what makes the most sense for your situation. So people can decide that individually.
Yeah. And I know too, as a realtor, we look at that and we look at two different things. Number one, we look at getting it through underwriting. So obviously, if the buyer came to this conclusion after they've got an accepted offer and they want to increase the price so that the seller then pays for part of the buy down so that it's kind of on the bank loan, quote unquote, that's probably not going to fly in underwriting, is it?
Well, where we will run into issues a lot of times is, the appraisal. If
Yes.
the appraiser goes out there, he appraises the house, he appraised it basically at value for the contract, and then we try to add, 15,000 in concessions. I would say that's where underwriting usually runs into an issue. It's not so much an addendum adding those things, but yeah, usually it is ideal if we can negotiate that up front, maybe an addendum afterwards. But yeah, that would, I would say, be the biggest hangup that you'd run into.
Yeah. And of course, as a realtor, we're always looking at is it going to meet appraisal, which we really haven't had a whole lot of problems with, or at least I haven't for quite a while. But I remember a few years ago when the banks tightened up a bit, appraisals tightened up too. And all of a sudden, like we were negotiating on each one. And so for a first time home buyer and, a home seller, if they're not willing to meet in the middle, then it's going to fall on the home buyer if they want the home or not to have to kind of pay the difference on that
Yeah.
sometimes. But luckily, we're not in a scenario, we're in a very balanced market right now. And balanced markets are different than buyer markets or seller markets. So in a balanced market, what I find is that, appraisals are, I don't want to say lenient, but they're not as tight as they are when it's, completely when the banks are tightening down on things. That's at least what I've noticed. Obviously, we're not allowed to quote unquote talk with the appraisers anymore. You might be able to, but as agents, we're not allowed to. Um, and it's rare that they miss something. But I do have appraisers calling me every once in a while, and they'll ask about something like there's added square footage where someone's enclosed a porch. And, does it show with the county records? And, is it permittable extra square foot? Because a lot of times our tax records don't necessarily update very quickly. So in fact, sometimes it takes 6 to 8 months for that to happen. But on those type of issues, every once in a while they'll call and ask, did you have the building permits with this? Does it have heating and air conditioning, et cetera, et cetera? But very rarely do we run across that. The other thing is water rights. If we have a property that, like we ran into one in Dameron where there was like eight or nine shares of water rights with it, and obviously, those shares were worth $20,000 or $30,000 per share to have, and so the house is going to appraise for a lot more with those rights, but the appraiser has to kind of get the background on that, knowing that they're there. So we do see some variances with appraisals, but have you run into a lot of appraisal problems within the last couple of years?
I wouldn't say that I've ran into a lot of appraisal issues. Typically, appraisers around here are pretty good to communicate, and I wouldn't say they don't miss things, but if we have other information for them to consider, they're certainly willing to look at that. So it's not like, oh, I didn't see that, I don't want to see it. Usually, we can provide them that. I will say, however, recently, and I'm sure you're having these conversations with your sellers, is obviously we have had a little shift in the market, like you alluded to. It's a balanced market. We were in a situation where it was absolutely a seller's market. So with that shift, it has created, I would say, where some sellers are still trying to, I guess, reach for the sky. They have this high watermark number in mind and realize, I mean, especially if someone's going to have to finance that property, the appraisal is absolutely going to become, important in that because you can price it whatever you want. You can get an offer in on that, but unfortunately, when it comes to the financing, we're only going to lend off of the lesser of the appraised value or the purchase price. So what that ends up meaning is if there's a gap there, exactly what you said, I mean, the buyer has to essentially cover that difference if the seller is unwilling to reduce their price. So the appraisal, I wouldn't say is being an issue, but I would say right now the concern would maybe be some of the listings if they're overpriced. Yes, unfortunately, we can have the appraiser reconsider things, but it's really difficult when we do have actual sales in the neighborhood that are very identical to it that sold in the last 3 months. When it's like, well, unfortunately, we all know that, a recent sale like that that's what we're going to use to gauge what the
Yeah,
value is on an appraisal. So
yeah, and
that's
those
what I would
run
say be careful about.
those do run all over the map sometimes in specific neighborhoods. Well, listen, Rich, our time is about up right now. I wanted to thank you again for joining us and give us one more time. How can people reach you?
Yeah, absolutely. Again, appreciate your time here, Dave. You can reach me directly at 435-669-8003. You can also just send me an email at rich@trhomeloans.com.
Fantastic. And I'm Dave Diegelman with Equity Real Estate. You can reach me at 435 703 4041. or you can reach me at dave@utahdreamhomes.com, which is utdreamhomes.com. Well, thanks again, Rich, and have a great day.
Absolutely, you too. Thanks.